So you're finally thinking about buying a home, or maybe your cousin who bought a home last year is now pressuring you, or maybe you're tired of sending money into the void every month. Whatever brought you here, you're welcome. Pull a chair, grab your tea, coffee, food, whatever, and let's talk. Because listen, buying a home does not have to be stressful, confusing, or overwhelming. I help home buyers here in Minnesota understand how to buy their home with confidence and without drama. Today, I'm going to walk you through the entire process, plus credit, down payment assistance, culturally specific mistakes that I see, Susu money, and much more. By the time we are done with this, you're gonna say, wait, that's it? Really? I can do this? So let's go. Step 1. Let's talk about what you can afford, not what the lender said you can afford. All right? First question, have you actually sat down and decided what you are comfortable paying every month? Not what your cousin pays, not what TikTok says you should pay, and not what the bank claims you can afford, but what you can afford. Because lenders, they only look at what shows on your credit report, debts, loans, car notes, credit cards. What they won't see, your daycare bill, your remittance to family back home, your Susu contribution, your church commitments, and your real life budget. If the lender says you are approved for $450,000, that does not mean that you should find a $450,000 house. Think of it like food. Just because you can eat an entire pot of rice does not mean you should. Your stomach and your reality are two different things. Same with your mortgage. Calculate what monthly payments won't choke you, then we move on. Step 2, choose the right realtor. This part is very important. Buying a home is a big decision, and I want you to think about it this way. Buying a home is like going to the doctor. You want someone who takes time to explain things, understand your situation, answer your questions without rushing, and knows exactly what they are doing. A realtor should feel the same way. You want someone who educates you, advocates for you, understands first-time and first-gen buyers, and treats you like a person, not a transaction. This is the person guiding you through transactions, negotiations, inspection, and financial conversations. So choose someone you trust, someone you're comfortable asking basic questions, someone who makes the process feel clear, not intimidating. Once you choose your realtor, ask them for a lender recommendation and then pause before house shopping. Step 3, get organized before applying with a lender. Before you apply with any lender, get organized. You want last 30 days of pay stubs, 2 months of bank statements, last 2 years tax returns if you're self-employed, employer contract information if needed, your ID, and W-2s for the last 2 years if applicable. Pro tip, you need to create a folder on your phone or computer called Home Buying Documents. That alone makes everything smooth. You can apply with up to 3 lenders, so having these documents ready saves you time and stress, because rates vary, fees vary, and down payment programs vary. Now, you get to decide which one you want to work with. This is the biggest purchase of your life, so it's okay to compare options. And no, applying within a short window does not hurt your credit multiple times. So it's okay to apply with more than one lender. But just realize that lenders don't like this because it costs them money to pull your credit. So you don't want them to do all the work for nothing. If you work with one lender and you feel they are good enough, that should be fine too. But you have the option to compare lenders and choose the one that is a better fit for you and can give you the best terms. Now, let's talk about credit. What is good credit? Let's clear this up. You do not need perfect credit to buy a house. Here's a general guide. 740 plus is excellent. 700 to 739 is very good. 660 to 669 is good, and 620 to 659 is still workable. Many first-time home buyers in Minnesota buy a home with credit in the 620 to 640 range. So credit is not a judgment, and sometimes people buy with a lower credit. Credit is just a trust score and it can be improved. That said, how do you build credit? Pay everything on time, keep balances under 30%, don't close old accounts, dispute errors, and avoid opening new accounts. Credit is like going to the gym. One workout won't change everything, but consistency will. What are some of the things you shouldn't do while buying a house? Please don't do this. Buy a car, open a new line of credit, finance furniture, move large sums of money around, quit or change jobs without asking. Your lender wants stability, not surprises. This is a big one. A lot of people buy houses with Susu money or cash savings, but how you use this money matters. A lot of people have money under the mattress. Susu is a great saving, so is the money under your mattress, but your lender needs documentation. Cash deposits must be seasoned or sourced. If your Susu money is cash-based, start depositing small amounts early or talk to your lender or your realtor before moving money. We can give you the best advice on how to make sure that this money is used legally. It can be a problem if this money gets deposited in your account and you cannot source it. It can actually prevent you from closing on your home. So this is a big one. A lot of people use it, but talk to your realtor. Step 5, shop with intention. Just remember, location, location, location. That will make or break you. Now, ask yourself these questions. Can I live here for 3 to 5 years? Is the neighborhood stable? Does this make sense long term? This isn't just a house. It is your house. It is your lifestyle. So you can choose a location based on your job, your schools, things of interest, or based on cost. But it's important that your choice should be something that you can afford in a neighborhood that you like. Step 6, make an offer. Your realtor is going to help you with this one. They will help you decide pricing, negotiate, understand timelines, understand contracts, and once the offer is accepted, you are under contract. You are required to put in a deposit, like a security deposit. In real estate, it's called earnest money. This is a good faith deposit to show the sellers that you're serious about buying this house. Once this deposit is made, or after your offer is accepted, we move on to step 7. That is inspection and due diligence. Inspection protects you and the cost is on you. But with an inspection, the inspector tells you things that you should be concerned about, and you can go back and negotiate with the seller, ask for repairs, request credit, or you can walk away if it doesn't work for you. This step is about peace of mind. Now, let's talk about step 8. Underwriting and appraisal. This is where the lender verifies everything. You'll confirm your income, employment, and assets. An appraisal will be done to confirm the value of the house. If it comes in low, we renegotiate. If it's at or above the price we are paying, then it's all good. Step 9, closing day. This is when you get to sign, get your keys, and the house becomes yours. This is where generational wealth starts. Just as a bonus, I want us to talk about loan options. There are different kinds of loans. You have FHA loans, which is government-backed, 3.5% down payment required, and flexible credit. There's also conventional loans, which requires 3 to 5% down payment. With conventional loans, private mortgage insurance drops when you have about 20% equity in your home. There's USDA loan, 0 down payment required, but this is more for rural areas. And there are also VA loans, 0 down payments required, and this is for veterans. Minnesota also has down payment assistance programs. Some are forgivable, some are deferred. There are many options. I help buyers match the right loans to their situations. So you don't have to be rich, you don't need perfect credit, and you don't need to know everything today. You just need the right guidance and a plan. So if you are thinking about buying, even someday, start preparing now. Let us have a conversation, and when you are ready I'm here to guide you through it. Let us have a conversation. If you find this information useful, do not forget to like, share, and subscribe. In a nutshell, these are the different steps. The most important thing that you have to do when thinking about buying a home is to work on your credit and save some money. Then let us have a conversation. Talk to a realtor to learn about the home buying process. And then get connected with a lender who can talk to you about financing, what your options are, what you need to do to get ready. You don't have to be ready right away, but you can plan based on their recommendation. And if you are ready right away, then by all means, you can buy right away. But if you're not, for some people, it takes months, years, but you all get there eventually with the right guidance. Once you talk to the lender and you're ready, you get pre-approved, and then we start house shopping. Choose the right location that is right for you based on what is important to you. When we find the right house, we put in an offer, and once the offer is accepted, we get to put a good faith deposit called earnest money and then do an inspection. Inspection is for your own good. You get to decide if you want a new home, an older home. Whatever house we choose is based on your recommendation. Single family home, townhomes, condos, it's completely up to you. So good faith deposit, we do an inspection, and once the inspection comes back, we can renegotiate. Once we're done with that, the lender does an appraisal, then it goes through underwriting. From underwriting, you get to close on your home. There's a lot more to talk about money when it comes to buying your home. What you can expect, there is a down payment, which I'll talk about. There's also closing costs. You have to worry about your inspection fee, your appraisal fee, and the earnest money deposit. So if you have any questions, give me a call today. When it comes to buying a home, this is the biggest concern that people have. And this is all about money. You want to find out what it will cost you to buy a house. Some people buy a house with little or no money out of pocket. But there are some costs that are the responsibilities of the buyer. Those can be taken care of by the seller, or if you are using a down payment assistance program, that can also be covered. But being a first-time home buyer does not automatically mean you get assistance with your down payment. You have to apply for it. What you expect to spend out of pocket if you don't get any down payment assistance or seller paid. Seller paid means the seller can contribute towards your closing costs or buy down your rate. Now, if it's all coming from you, you have to pay your down payment, which can be anywhere from 0 to 3.5% or even more, depending on the kind of loan that you qualify for. You have your earnest money deposit, which is a good faith deposit usually paid when your offer is accepted to show that you are serious. On average, that is about 1% of your purchase price. You have your inspection fee in Minnesota. On average, that is about $600. It could be more or less depending on the size of the house and what you want. You also have the appraisal fee. The cost of that is on you. It could also be anywhere around $600, more or less, depending on the size of the house. The cost is on you as well. And then you also have your closing cost. Closing cost is one thing that most buyers don't know about. They don't know it exists. They know about down payment, but they don't know about closing costs. But closing costs are fees and charges for things that are done during the transaction. So when you do a credit check, there is a fee for that. It's part of your closing costs. When they do a title search, there is a fee for that. It's part of your closing costs. The lender's fee is included in your closing costs. Your property taxes for a few months is included in your closing costs. Your homeowner's insurance for a whole year is included in your closing costs. And there's some tax, state tax and deed, those are included in your closing costs, and maybe broker admin's fee. So there are a couple of fees, and those can add up to about 2 to 6% of the purchase price. So knowledge is power. Be ready. A lot of people worry that their mortgage is too high. What is a mortgage? Now, a mortgage, to some people, when they say mortgage, they believe it's just your principal and your interest. No. Mortgage includes 4 or 5 things. It includes your principal, your interest, your homeowner's insurance, your property taxes, and if you don't put down 20%, it also includes a mortgage insurance. So when you hear someone say my mortgage is $3,000 a month, it includes all those 5 things. And of that portion, the principal and interest may only be $2,000 or $2,500. So this clarifies it for a lot of people when I explain, because they are just wondering why my principal and interest alone is that expensive. Now you know. If you have any questions, let me know. There's a lot to the home buying process that I can explain in one video, but you get a general idea, and if anything is of concern to you, let me know. I am Lesley, the realtor with Bridge Realty in Minnesota, and when in doubt, call Lesley the realtor.